let's look at the Israel's stock market, because there's a very interesting pattern. First off, we read this disclaimer carefully. In this video, we are going to the Middle East. Specifically, we're going to Israel. Here is the distance from the 52-week low and 52-week high. Specifically, the name for this one is called iShares MSCI Israel ETF. EIS is the ticker. Let's first look a bit at the seasonality. You can see here that August, which is the current month, given all of these years, it's really a weak month. So something about August that's pretty clear. If we look at it against the S&P 500, and then we get all the data, you can see that from January heading into August, there's a very clear weakening, meaning the EIS is underperforming the S&P 500, except for, interestingly, September. September is just as strong as January, with an average gain here of 0.7%. So that's interesting. So this is the percentage of months in which it outperforms the S&P 500. So that is the seasonality. Let's look at the charts. So this is all the data we have here, and one of the clearest things that just jumps at me right away is the cycle patterns. So let's see how consistent these cycles are. You can see that there certainly are some smaller cycles here. Given the cycle patterns, we are towards the later part of that smaller cycle. We can also see some more major cycles. Let's see how reliable they are. You can see that during this period we had some very clear cycles, but then there's a very sharp break and we get some smaller cycles all of a sudden. Then we have a period of these cycles, and you see that then all of a sudden they are of similar size. Then there's a cycle break, and we get the most recent cycles we looked at. But the key trend here, quite obviously, this is very good for swing trading. There are very substantial rallies, and there are very, significant sell-offs. This pullback here, as an example, was minus 23%. That's a good short. Here again, we have a pullback, and it becomes, 19%. If you look at this rally here as an example, from there to here, that's, approaching 20%. Hence, from a swing trading perspective, this is really good. When there is a downtrend, it is relatively consistent. So if you have like a short position with a trailing stop, or a long position with a trailing stop, usually it works out pretty well. So that's very interesting. Now, if you look a bit at some of the numbers here, you can see that RSI is more or less in the neutral zone. The accumulation distribution line, you can see that it is not. It is very close to where it is here than what's back here. And so even though the share price did have a bit of a rising trend, you can see here that the market changed. So after the financial crisis in 2008, you had a very strong rally, and then you made it a high back here in 2011, and then we tested that high before the pandemic crash. But basically, the Israeli stock market has really been stuck in this massive range. A lot of jockeying back and forth between the bulls and the bears. There's a 78% positive correlation with S&P 500, so they kind of do move together. Yeah. We are currently above, the key moving averages. That's of course bullish. We've had this, post-pandemic rally. Up to this high was 53%, but we are quite away from a new high here on Israel, and we have gone back into a zone where the bears have lost the bears have lost and the bulls have lost. So basically, it's like a real battle zone up there. Let's now go to the daily data points. Let's load the moving averages. So here you can see, the cycle patterns quite clearly. I mean, they are rather nice. This is very quite good for swing trading. A lot of opportunities. So even though throughout this time frame here, there's only been, a 23% gain for this ETF. If you captured the swings, I mean, your gain could be much, much better than that. It's all about, of course, letting the trend be your friend. We are above all the key, well, not all, but many of the key moving averages. We have a bit of a golden cross here, but the golden cross and the death cross, they are very slow. So if you use like the death cross as a sell level, then you literally would be selling at the bottom here, which would be like a horrible time to sell or really go short. Waiting to buy here would also be a bad idea. So basically, this is a good illustration of why that technical signal, it's not always that good. There are definitively issues. Yeah. So let's look at some additional data. Okay, so here we have from Finviz, there are no options on the EIS. It is, however, shortable. Here is the performance, minus 4-ish% year to date. That's kind of bland. It's a number 2 buy from Saks.com. Okay, that's interesting. So let's go to dividend and valuation. So first we look at the PE ratio. So the PE for the Israel market is 13.5. That's decent actually. It's not too bad. The acquirers fund has a lower PE of 8. I haven't heard about that one before. The lithium ETF has a higher PE. It's at 33. I really am not a fan of these comparisons here from ETF database, because this doesn't make sense. They should have like categories for these ETFs. So it makes more sense, of course, to compare Israel against other country ETFs. So this is just bad. So I will complain about this to ETF database, and probably you should complain as well, because the more people who complain, the higher the probability that they will make changes. Because they do say that the category here is large cap blend equities, but the lithium ETF, that's not a blend, that's highly specific. Yeah, there's a disconnect here. So that means that it could be probably changed easily with some database signals. Okay, let's go to the dividend. So the dividend for this Israel ETF is 2%. That's, it's a okay dividend. You are paid to wait. Okay, that's okay, 2%. The advisor share Dorsey Wright ADR, it has virtually no dividend. Obviously, that's a lot worse. The Invesco S&P 500 Pi Wright ETF, which is completely different kind of ETF, that one has a 6% dividend. Yeah. I don't like these comparisons. I mean, it doesn't make sense. Here you can see the fund flows. Certainly been some increase here in sellers. That's very interesting to observe. Here in June as well, some deep selling here in June. And if you look here at the chart, it's interesting. Even though it's been going up, it's not been on a particularly impressive volume. Okay, so to sum up my take here on this ETF, am I bullish or am I bearish? Given that there's very clear cycle patterns here, the pullbacks are very frequent indeed, very nice cycle patterns. Given that we've had a very impressive rally, I would look more at bearish opportunities at this point. Because that is just the psychology of this market. Just look at it. It says it quite clearly to you. And you can see that back in the day here, the cycles were much bigger, but they have become smaller, which strongly suggests that there could be a pullback on the horizon. And when there are pullbacks, they are meaningful. Then again, when the pullback is over, this is an ETF that's very good to buy on that dip, because there are usually these very nice rallies as well. Okay, now we get into the chart frenzy round of the video. Let's look at Home Depot. We are using weekly data points. So Home Depot made a new all-time high. Obviously that's bullish. Very strong performance here for sure. The bulls are in control. The accumulation distribution line is corroborating the rally. But you can see here, if you look at the history of this ETF, there usually are pullbacks, but the uptrend can be very strong. You have every now and then some more significant pullbacks. But generally speaking, there can be some substantial periods of rally, then followed by consolidation, rally followed by consolidation, rally followed by consolidation, rally, and yeah, that was a bit of a crash. But there is a risk that we could get into a consolidation phase here or a pullback. So that's at least the history of Home Depot. Okay, let's look at Microsoft. So Microsoft, I mean, very impressive gains in the 366% within, since here July 2015. And bear in mind that Microsoft is one of the biggest companies on the entire planet. So for it to go up, almost approaching 400%, that is very, very impressive. Here, yeah, you can see that there's a bit of an exhaustion, because I mean we have gone up a lot. If you look at the long history here of this stock, here all the way back to the financial crisis, we usually don't stay that overbought. Though it's more common for us to be overbought than oversold, but that's due to the strength of the underlying markets that Microsoft has exposure to. But then again, we have recently been overbought. There was a bearish divergence on the RSI, hence I would be looking here at some pullbacks. It would just be healthy and expected, based on the history here. It's quite some time since we have visited some of the slower moving averages. And historically, we usually do that, as you can see here. Okay, let's go to the next one. That's Goldman Sachs Group. One of the first things that jumps at me here is that we have some very big cycle patterns. Huge cycle. Also seems 1, 2 to be smaller cycles within the major cycles. Here we have 1, 2. Well, it's a bit more complicated here. 1, 2. You can see here that when it comes to the cycle patterns, there is some repeatability here. You usually have a major cycle and then smaller cycles within. Major cycle. The recent, pandemic, of course, it did do a lot of. It shell-shocked many cycles, so they have kind of broken. But the trend here quite clearly is that it's very good for swing trading. And the banks, the financial sector is, if we look here at XLF, you can see that it hasn't participated nearly as much in the pandemic comeback than, say, like the XLK or the consumers' discretionary stocks. I did hear some theories here, though, about the financial sector. A theory is that the central banks are actually kind of hostile towards the smaller banks and even actually the bigger banks. Basically, the central banks want to be the king. They want to be the bank to more easily plan the economy. It's still a theory. It's just a theory, but there could be vested interests in actually seeing damage to the financial sector. So that's something to just be aware of. At least, especially when it comes to the regional banks. The regional. I know there's regional bank ETF. Here we have it. Korea. Oh yeah, here's the regional banks. Okay, very much. Not even. I mean, it has seen a little bit of a bounce, but far less than what we. Than what would be healthy. Okay. Okay, very interesting stuff happening here in the market. Whatever you do, of course, don't fight the trend, and may the trend be with you.